Hello, everyone, and a very warm welcome to this week's Gold and Miners update for September the 12th, 2024. We have been bullish on gold, the gold miners, silver, and the silver miners for a very long time. Unfortunately, I saw this article today. Silver's year-to-date gains beat that of gold, copper, and the S&P 500, but the investors mostly yawn. As usual, nobody is bullish yet, but they will when it's too late. That's the very unfortunate nature of the markets. Indeed, it is very hard to get anybody interested in these commodities. However, here is the GLD versus SPY versus BITO, which tracks crypto or Bitcoin to be more accurate, over the last 1 year and the last 6 months. GLD gained 34%. SPY gained 27%. BITO gained 108%. So yes, over the last 1 year, BITO outperformed both of them, but gold outperformed SPY. GLD does not pay a dividend, SPY does. Other than that, you should have been in GLD, not SPY, clearly, or in both. You're missing out if you're not in GLD. That's the message over the last 1 year. And by the way, we've been bullish on these commodities for almost 2 years now. So again, once we are getting bearish, you all turn bullish, unfortunately. And that's what we want to prevent, that you turn bullish at the right time. And now is the right time. If we look over the last 6 months, GLD gained 17%, SPY only 9%. That's 50% less almost. BITO lost 22%. Okay, BITO pays a very nice, hefty dividend, but that's it. Over the last 6 months, BITO, besides its dividend, has done nothing but cost you a headache. Now, we remain bullish on Bitcoin for sure, as we are also bullish on the S&P 500. But it just shows you how well gold, and I haven't even put silver on this one, and the miners have performed just over the last year and especially the last 6 months. And in my humble opinion, you should put your money where it works the best for you. Doesn't mean you have to put your entire savings into one nest egg. You need to spread it out, but it simply shows what can be accomplished if you would have spread it out to GLD, because I see way too few people interested in these. And this will be sent out to all of my premium members to again remind them it is now a great time to enter and our premium servers. Okay, contact me at info@intelligentinvesting.market, because normally this service is only for those that already have another subscription with me, either major markets or an ETF trading alerts. It's only $40 a month, not even $39.99, but we round it up to $40 a month. You get a weekly update like this video you're seeing right now. Here's the link to a direct sign up. Maybe it is active when you get this PDF. I hope it is. If not, just contact me. Also, for those that are listening on YouTube, that are viewing this message and video through X/Twitter, all that good stuff, we are here to help. We have been bullish quite a while on these ones, and we do not want to miss the boat, especially not for you. Again, most investors are yawning, but the gains speak against the yawn. They really do. They have outperformed the S&P 500 over the last year and over the last 6 months. Just an example. I don't want to go too far back in time. We can go further back in time. That's all fine and dandy, but it shows you where we can get big gains. And especially over the last 6 months, crypto is not the place to be. Not yet. Now, again, you can do BITO, you can do staking, whatever you want to do, but it just shows you if you have some money left, you should have put it in GLD and made some money. That's the whole idea. And that's what we want you to accomplish. Okay. So, for example, let's see here if we go to the slides. Here is an example of, I believe, a update from January 29th. This is as far back. We were already bullish on gold, a 1-2-1-2 setup. And of course, we would look for much higher prices, right? That's what we were looking for. This is from 9 months ago. We were bullish. Where were you? That's the idea. GDX, we were bullish. Where were you? All right. GDXG, we were bullish. 1-2, potentially ABC, but a 1-2 was the preferred path. Okay. We were bullish. GLD again, bullish alternative wave count. But just to show you that we've been bullish over the last months and year, if not more. And the question remains, where were you? I hope you were invested. I'm afraid most likely not, because that's what the news tells us, right? That's what it tells us. Most are not, and we hate it for people to miss out and become bullish when it's too late. When it's too late, it's probably when we get close to the final leg higher on this impulse. Okay. And we have had these much higher targets for a long time. And I really appreciate those that have been with me for a long time and sticking with it, because this is a fantastic, so far pretty easy to Elliott wave count and track market. Okay. So there you have it. Please contact me. And if you can click the link, please sign up. Okay. And again, I cannot be right all the time, but as I just showed you, we've been bullish already for the last 9 months. I can go even further back in time if you need more evidence. I can send you all the updates if you want and show you how much you've missed. And again, we're tracking the Elliott wave, or we're using the Elliott wave to track these markets primarily. And it's been quite a success. We always provide our stop levels using the bull warnings and the bear warnings, because of course there have been pullbacks in case you want to short stuff. I wouldn't recommend shorting, not even in general, because the trend is long-term higher. So that is the path of least resistance. This is our wave labeling, as you know, and let's go straight to the charts. Enough said. So here is gold. We've been tracking this ending diagonal, and this is gold continuous contracts. Unfortunately, it has not been updated today, but of course it's higher. And we're still looking for this 2657 target, potentially 2700 target. For those that have been with me for a while, you know that's been the longer term upside target for this wave. And again, it doesn't mean we're done yet. Then we still believe we're going to get a pullback and another leg higher. These are the yearly candles for gold. Cycle 1 here in, I believe, late 70s, early 80s. Cycle 2 here in the late 90s. Cycle 3 here in the 2010s, 11s. Cycle 4 here in 14. And then a 1, 2, 3, 4. And we're now in this extended wave 5 with the previous 2 years, I believe 20 and 21, as a large primary fourth wave. And now this impulse, as you can see, well into the high 2000s. So we're not done yet. And I don't want you to enter here, but you can see what you've already missed. So, okay, this is September. This is August. Or sorry, this is pretty much, this is a year. I mean, this is pretty much where we already said that we are bullish on these commodities. So moving then on to GLD, this is the ending diagonal, similar to gold continuous contracts we've been tracking. It's been a sideways mess for an extended period of time, but this was our preferred wave count, contingent on holding above the warning levels, which now have been raised. A fantastic, nice breakout. And we believe we are on target for 240, 242, potentially 247 for this, not an expanding, but contracting ending diagonal pattern. So far, this looks to be the ideal setup. Why? Because we have some overlap here with this potential gray 4 and this potential gray 1. Why is it potential? Because we have no confirmation yet. We need, of course, a 5 and a 4 and a 5 to finalize this wave count, but this has been serving us pretty well. The trend lines are, of course, a little bit subjective, but it shows you the contracting diagonal pattern we're following. That should target somewhere between ideally 247 and I believe the low 250s. And that, of course, then matches again with what we're seeing here for gold continuous contracts. Okay, so far so good. We like it. This is the bigger picture. So we are in this 3, we get a pullback for 4 and another 5. Okay, we are in this 3, we get a pullback for 4 and then another 5. So far so good. And we don't see this bull run having ended just yet. Okay, silver, what a day on silver. Okay, so these were the warning levels for the bulls, and we did break below the 3rd warning level. So you are excused if you said, you know what, I'm going to sit on the sidelines and wait it out. But now we have a fantastic reversal, and this looks very bullish, this chart setup with this expanding diagonal right now. and a very strong reversal. And if we break above 34.5, we're going to look much higher for silver into the mid 40s. SLV, silver miners, this was the wave count we've been tracking. Excuse me, the 1-2 setup. And as you can see, today we broke above the third warning level for the bears. And all we now need is a move above 29 pretty much to confirm this wave 3 to about 30.46, then a drop back to about 28.29, and then another rally for this impulse. So it's still tentative, but this looks pretty good. Okay, so these are the warning level for the bears, and we've broken above it. So this is now our preferred wave count. And as you can see, we have raised, of course, the warning levels for the bulls accordingly. Bottomed perfectly in this ideal wave 2 target zone, as we outlined already 2 weeks ago, I believe it was. And we should now be on our way again to this low 30s level. Again, we had this level here at about 27.25. And as you can see, we closed above it. We've moved back above the 50-day moving average, back above the 20-day, back above the Ichimoku cloud, and we've remained above the 200-day moving average. In my humble opinion, as long as things remain above a 200-day moving average, it's a buy the dip environment until proven otherwise, with, of course, always prudent stops in place, because big tops always happen above the 200-day moving average, okay? Just as big bottoms always happen below it. But the general trend is higher, and we have reversed completely. Even yesterday, the trend was still intermediate to short-term lower because we were below the cloud, below the 50, below the 20. Today, that has completely changed. So now it is 3-4-5 path that we already postulated, as I said, 2 weeks ago, if not longer ago, is the preferred path going forward. So this is the bigger picture wave count, or actually not wave count, but projected upside target for SLV into potentially the high 30s. There you have it, based on this triangular pattern that has been completed since 2020 low. Okay, so this is the symmetrical triangle. And if we break out, then the length or the width of the triangle can be added to the bottom where we kind of staged the breakout from. Okay, you can add it here to 23 as well, but that is about the same. So the high 30s seems to be the appropriate target. All right, moving on to the gold miners. Remember, we had the Alt3, Alt4 wave count, but that one is now, in my humble opinion, off the table. Today's candle looks really good. The chart starts to turn very bullish. We've raised the warning levels for the bulls accordingly, with, of course, the third warning level at last week's low. And we've done a nice AB 1, 2, 3, 4, 5 for C wave lower into the ideal wave 2 target zone that we already placed there a couple of weeks ago. And so far, so good. And we should now be on our way for this wave 3. And let's see here if we can update the target zones a little bit there. Then we should, of course, move higher for the wave 5 eventually to complete wave 5 of 5 of 3. And as you can see, that is still not the end of this bull. Okay, so we had this A, B, C for a irregular running flat wave 4. Then we had 5 waves higher for wave 1. And now we're going to apply standard Fibonacci-based extensions to reach these higher targets. Nice breakout today. Even yesterday, we were still essentially below the 10, the 50, and the 20-day moving average. And today we broke quite resolute above it. And that's really good. The trend is now almost 100% bullish, meaning we now want to see the 10-day simple moving average also move above the 20. And then you get this nice bullish trend. So this is our preferred path, bottom where we had to, correct it as it had to. And now it should be off to the races. GDXG, similarly, we expected to reach the low to mid 50s for this wave 3. Hasn't broken out yet, but again, above 48.5, 49 will confirm this wave 3. Then a wave 4 pullback, which should hold above 49.5, and then a wave 5 into the high 50s for wave 5 there. So this still looks, of course, as a completed wave 4 here, an ABC, then a 1 and a 2, 1, 2, 3, 4, 5, AB, 1, 2, 3, 4, 5. As you can see, the ideal 5 is 1 targeted somewhere around 42.25-ish. We bottomed at 42.48, very close. and we have raised the warning levels for the bulls accordingly. The first one is, of course, today's low. The second one is then yesterday's close. And as you can see, yesterday's close was right here at the April high. Okay. And now the break higher, as you can see here, today's low is equal to these August support levels. And you can see that's similar to here, the July support levels. And it's similar here to this early June bounce. So these levels are really important, but they're quite oftentimes logical. And of course, last week's low needs to hold. If not, we're going to revisit the 200-day moving average. But this is now our preferred wave count. Today's candle is fantastic, and I prefer to look higher. So I really hope you will join the bandwagon and won't be too late, and that you, instead of yawning, become excited about these metals and miners. And yes, they might not be sometimes as sexy as the cryptos or 3-time ETF or a Nvidia stock, but you know, this is kind of like a slow burn that can be quite rewarding. And remember, it is a marathon and not a sprint. And having something just set aside that kind of putters along and just kind of, you know, starts increasing, I wouldn't say day by day, but pretty much almost on a monthly basis, is a wonderful thing to have, besides another type of portfolio. Because true diversification is not having different assets necessarily, it is having different timeframes in mind. Because in a true bear market, everything gets sold because everything is risky, even gold and silver and cryptos. There is no real hedge in bonds. I don't know what, but true diversification, in my own opinion, is having a little bit of all of that, but on different time frames, shorter term, intermediate term, long term. So you can, for example, in a long-term uptrend, also profit from intermediate term pullbacks by buying inverse ETFs or shorting or going to cash, and all those things. So you always play the market correctly, and you don't have to, whatever floats your boat, but that's just my 2 cents. And I hope you appreciate this update, and I'll send it out to everybody, and it will be posted on YouTube and on X as well. And I hope you all want to join and reap the reward. This still looks very good in my humble opinion. And as you can see, we have our warning levels on the charts. I can never say this is 1000% certainty going to go higher. This is a game of probabilities. The market is a probabilistic environment. It is stochastic, it is nonlinear, and it's complex, just as the weather and climate is. So there are no certainties. And if there were, then we would never have invented stops and stop losses and trailing stops and all that stuff. Okay. They're there for a reason. In case we make the wrong bet, we will get out with as little damage as possible. And that's why we have these warning levels on the charts. We believe that things will go higher, and most likely they do. The charts look bullish, right? We give our complete report card on the charts based on the Elliott wave count, based on where price is in relationship to the moving averages and how are those moving averages aligned, what are the technical indicators doing, etc., etc. And with that, we then say, okay, most likely this is going to move higher, contingent on holding above these levels. So if you then desire to go long, you can use those, for example, as a stop loss. Now, if we break below it, it's not my fault. I don't make the market. I don't sell against you, so to say, or vice versa. I don't. I simply point out that these are the possibilities. And most of the time, we are then correct. Because remember, we're about 70% reliable and about 95% accurate. How can we be 95% accurate? We can only be accurate when, of course, we make the right call. If we make the wrong call, we're, of course, inaccurate. Quite simple. But if we make the right call, most of the time it's 95% accurate, because we use these Fibonacci-based target zones. And yes, we can get extensions and we can also get truncations, but most of the time in bull markets, upside surprises and downside disappoints. But otherwise, most of the time, these gold and miners tend to adhere pretty well to these target zones. As you can see, we bottomed here quite nicely for that target zone. Similar, we did here, we bottomed here for this target zone. Now, I took some target zones away, but we topped here perfectly. We topped here perfectly. We bottomed here perfectly. Let me just simply point it out to you real quick. So this is the gray wave 1 target zone right there. So not target zone, but top. And as you can see, then of course your gray wave 2 target is somewhere around there. And as you can see, we reached it perfectly. Then your gray wave 4 should be somewhere around here. And we almost bottomed in it perfectly, intraday a little bit below it, but otherwise pretty good. And then of course your wave 5 goes there to the 176.4 to 200%. And as you can see, we pretty much nailed that one too. And that is pretty much how easy it sometimes can be. Just to show you, that's where our reliability comes in. And this is why we believe these are the target zones for GDX going forward. All right, I've said enough. Take care, trade safe. I hope you decide to join, and I'll catch you all next week, because these updates are once a week for this low price. I think this is a very fair deal. Take care, trade safe, and have a great weekend. Bye.